Well, boy, do we have a lot to unpack today. It seems like Reliance Industries has been busy, right?
Absolutely. And yeah, Reliance has certainly been making some moves. We've got their Q3 financial results, plus some acquisitions to dive into. So let's get right to it.
Okay, so it seems like all their segments did well this quarter. The numbers are up, but consumer businesses really shined. What were some of the key highlights?
The consumer businesses like retail and digital services were really the stars. I mean, they're accounting for 52% of their segment EBITDA. Auto C also had a strong sequential performance with a 16% jump.
Okay, so strong growth across the board, got it. And Jio's ARPU is up too. That's interesting. What was driving that?
Right. So Jio's ARPU or average revenue per user is up 12%, now sitting at 203 rupees. This is thanks to the tariff hike. And they're also adding more subscribers, especially in the fiber to the home space.
Okay, that makes sense. So more users paying a bit more. That's a solid combination. What about retail? They seem to have done well too.
Yeah, the retail side saw a 9 to 10% growth both year on year and a strong 17% sequentially. The festive season really helped boost those numbers.
Yeah, those holiday shopping sprees can really drive sales up. Any other standouts on the consumer side before we delve into the other segments?
Well, they're also seeing significant growth in their B2C grocery business. It grew a whopping 37% year on year. Plus, they're expanding their express delivery services.
That's quite a jump, 37%. I mean, that's significant. I guess they are tapping into that quick commerce trend, but also with their own infrastructure, right?
Exactly. They are really leveraging their existing stores for those express deliveries. And they have a much wider reach and higher order values. I mean, it's like they're adapting a recipe, but with their own unique ingredients.
Nice analogy. All right, let's switch gears. What about the Auto C segment, which I believe stands for oil to chemicals? How did they fare this quarter?
Well, Auto C had a steady performance year on year, but a significant 16% jump sequentially, driven by favorable feedstock sourcing and higher volumes. Also, domestic fuel retailing did really well for them.
Okay, so a mix of factors there. I also remember from the call that there were plant shutdowns during the same period last year, which makes the current rebound even more impressive.
Right. And domestic demand has been pretty strong too. Oil demand grew about 6%, polymer 11%, and polyester 12%. So that has helped offset some of the global market volatility.
So it sounds like their diversification is paying off. Good. Now, what about the upstream business, oil and gas?
Their oil and gas segment had a steady quarter, although revenues were slightly lower due to lower volumes from their KGD6 field. Prices were slightly higher though, at about $9.74 per million BTU. So that helped soften the impact.
Okay, that makes sense. Less volume, but higher prices. So overall, a good picture of a strong quarter across all segments, would you say?
Well, yes, the overall EBITDA was up 8% year on year, and the PAT, that is profit after tax, jumped 12%. Consumer businesses and Auto C are the biggest contributors for growth this quarter.
Fantastic. Now let's talk about Jio's 5G rollout. That was a key topic in the presentation. How is that progressing?
So they now have 170 million 5G subscribers, with about 40% of their network traffic coming from 5G. I mean, they're essentially saying that if someone buys a new 5G device, they're very likely to end up becoming a Jio customer.
That's impressive. Seems like they've got a big lead in the 5G space. And what about Jio Air Fiber? How is that picking up?
Right. Jio Air Fiber is doing really well. More than 70% of their new connections are coming from beyond the top 1,000 towns and cities. They are now at 4.5 million Jio Air Fiber homes connected.
Wow, that's a lot of homes. So they are extending their reach beyond just the urban centers. That's an interesting trend.
Indeed. And they're seeing this whole greenfield opportunity of connecting 100 million homes. So they're definitely going after the underserved markets.
Okay, and beyond just consumer connectivity, I believe they are making inroads in enterprise solutions too.
That's right. They're seeing a nearly 3 times increase in large government tenders. Plus, they are winning contracts from cooperative banks and large corporates seeking a single solution provider.
That's strategic. So they are not just focusing on one front, but diversifying into different markets and segments.
Precisely. And they also have a platform called GeoCX that offers connectivity and communication as a service. It's a move beyond just basic connectivity.
So I think they're really trying to build a whole ecosystem of connectivity plus services that makes sense. Let's touch on the AI push now. That was pretty big too, wasn't it?
Absolutely. They're talking about building a national AI infrastructure and trying to achieve the lowest cost inference capabilities. They see this as a huge opportunity, just like they did with broadband.
Interesting. So they're taking the same approach to AI. What kind of AI services are they launching or looking at offering then?
Well, they've unveiled GeoBrain as a platform, and they have a beta offering called AI Cloud, which is giving customers 100 GB of free cloud storage. I mean, previously you only got 5 or 15 GB from Apple or Google.
Yeah, that's a significant jump. So they are bundling storage with AI and making it available to the Indian consumer.
Exactly. And they're also launching something called GeoCloud PC. It lets you use your TV and set top box as a PC through cloud computing. It's all pay as you go without any need for upgrades.
That's a smart move, making tech accessible to a wider audience. It's like taking a restaurant's kitchen and making it available at home.
Right. And this cloud PC is designed for both students and gig workers that gives them access to resources for work or learning. So many different use cases.
All right, before we jump to the financial bits of the geo numbers, there was a mention of this whole 5G rollout. Is that contributing to the numbers?
Oh, yeah, they're highlighting that 5G is a large part of their traffic. Plus, as more and more people adopt 5G, this will keep growing. It's very much like a snowball effect.
That makes a lot of sense. Okay, so on to the financial numbers for Geo. How did those look like this quarter?
Well, operating revenues grew by 19.4% year on year, and that is a total of 33,074 crores. And their EBITDA increased by 18.8%, hitting 16,585 crores. So a very healthy quarter overall.
Those are very healthy growth numbers. What's driving this growth apart from increased subscriptions and higher ARPU?
It's also driven by the scale up of digital platforms, and they're really focusing on improving the customer mix. Digital revenues, especially, have been climbing by 60%.
Wow, 60% growth in digital revenues. That is something. I mean, it sounds like they are really diversifying their revenue streams and not just depending on the basic connectivity.
Exactly. And their annualized digital revenue run rate has already crossed 15,000 crores. Their subscriber base is at 482.1 million, with an increasing rate of customer additions.
And how is the home segment contributing to the growth?
Well, they added 2 million new home connections this quarter, and there are already 4.5 million Geo Air Fiber homes connected. So this segment is growing very quickly.
That's a lot of new homes. So their fiber internet business is seeing significant expansion.
And, they expect to be the largest air fiber service provider globally in the coming months. Their per capita monthly data usage is also very strong, sitting at 350 GB.
Now, that's some heavy data usage. It clearly shows the customer engagement. So with the ARPU increase plus higher consumption, they seem to be getting a dual benefit.
Absolutely. And they're calling themselves the world's leading standalone 5G operator outside China. So that's quite a claim. And, they're growing faster than other players in the market. It's like a race, and they're way ahead.
Got it. Now, before we dive into the retail numbers, I think this would be a great point to remind our listeners to like, share, and subscribe to our channel for more insightful conversations.
Yeah, that's right. And if you like what you're hearing so far, then please do give us a thumbs up and hit that subscribe button. And now let's get back to retail.
So the retail business crossed 90,000 crores this quarter. That's huge. What was driving the growth?
Yes, the retail business had a really strong quarter, reaching 90,000 crores in revenue, which is roughly $10 billion. Much of this came from the festive season and wedding season sales.
Those two seasons can really boost the economy, it seems. So what were some of the other key drivers apart from the festive season?
Well, it's also due to streamlining operations and productivity improvements they've made over the last few quarters. So that work is starting to pay off.
Okay, so a mix of external factors and internal improvements there. What about the different segments under retail? Did they all see similar growth?
The grocery business, their B2C segment, grew 37% year on year. Their fashion and lifestyle businesses also saw a very strong rebound after a few challenging quarters.
It's great to hear that. Their fashion segment bounced back. Any other specific areas worth noting?
The electronics business also had strong growth, and the rescue service organization, the electronic service provider, expanded to 75 new cities.
Yeah, I think that rescue service is a key differentiator for them in the electronic business. And they've been expanding that on-demand service too.
Right. And they also have their own brands business, which is expanding. And now more of that business comes from external channels rather than their own store.
Okay, so a strong focus on their own brands, but also growing their presence in the general trade distribution network. Smart.
And their B2B GMD business is also seeing strong growth, with mobile phones leading the pack.
Makes sense that mobile phones are a big part of their B2B business. It sounds like the retail segment is firing on all cylinders then.
Exactly. And even the apparel and footwear segment bounced back strongly. They've been focusing on design, supply chain, and customer experience, and that's driving growth.
Okay, I remember that they were launching new formats, new categories in the apparel sector.
Yeah, and their recent store formats, they're scaling up really well, and their own brands like Avasa, Netplay, and DNMX are performing strongly.
What about AJIO, their online platform? How did that do?
AJIO is doing well. They've focused on premiumizing their offerings, and their average bill values are up 7% year on year. They also added 2 million customers this quarter.
Okay, so higher average spend plus a larger customer base. That's great. They've also been expanding their catalog too, right?
Absolutely. They added over 500,000 options in the first 9 months of the year. So that's great. And now their total catalog stands at 2.2 million.
That's a huge catalog. So, what about the premium brands side of the retail business?
They saw a steady performance there as well, driven by the festive demand, and they're continuing to strengthen their portfolio with new launches. They've signed the India franchise for Saks Fifth Avenue.
Interesting. So, they are entering the super luxury segment and they have a joint venture with Mothercare as well, right?
Exactly. They now own the majority stake in the SPV that owns the Mothercare brand for the Indian subcontinent. It'll give them more flexibility with the brand.
Right. They'll have the ability to expand the range and improve the margins. It's like owning the whole recipe book instead of just using a page from it.
Yes. And the jewelry business, while impacted by gold prices, had a decent quarter with good sales during Dhanteras and the wedding season.
All right. So, even in that segment, which has had some external pressures, they still perform decently. What about the B2C grocery business that you mentioned earlier?
Right. That was a star performer with 37% growth driven by their big box formats. They're also continuously improving their assortment and premiumizing it.
So it's not just about the volume, they're also improving the quality and assortment of their products. And what about the online grocery business?
Well, they're focusing on 3 prongs. One is express deliveries, and that is using the existing infrastructure of 2,100 stores. That means deliveries in 30 to 45 minutes across 4,000 pin codes.
That's very impressive. And they're not charging for the delivery too, which definitely increases the value proposition.
That's right. And they're also growing the subscription business where customers pay for deliveries. They're growing that city by city.
So they are building both a quick delivery model and a premium subscription service for online grocery. What about their consumer brands business?
Their consumer brands business is growing exponentially. It's the FMCG business. They've had revenues upwards of 8,000 crores in the first 9 months of the year with brands like Kampa and Independence.
Okay, those are their own FMCG brands, and that makes sense that they are expanding and getting traction. Any thoughts about future for the retail business?
Well, their overall retail business is performing very well. They're optimistic about continued growth and also the benefit from the productivity improvements.
Right. So that's a good overall picture of a strong retail performance. Now, I guess we need to quickly touch on the oil and gas segment and then we can summarize things.
Yeah, so their oil and gas segment saw revenues at about $744 million. That's about 2.5% increase from the previous quarter. EBITDA was about 5,565 crores, a 5% increase.
So a steady, small increase compared to previous quarters, and the EBITDA margins were very healthy too, right?
Yes, their margins increased by almost 240 basis points. The key drivers were an uptick in CBM production and production from 34 of the 40 wells.
Okay, that's significant. And the KGD6 production has also remained steady, but they were realizing higher prices there, I believe.
Exactly. Their realization was $9.74 per million BTU, and their condensate barrel realization was about $75.24. So those prices helped offset slightly lower production volumes.
And they're seeing that the gas market is strong in India right now.
Yes, they saw a significant increase in gas consumption in India, and they expect gas prices to remain firm in the short term due to various global factors.
Okay, so all in all, their oil and gas segment seems to be performing steadily and in line with expectations. Now, that just leaves us with the O2C segment for a final roundup.
Right, so the O2C EBITDA for the quarter was 14,400 crores, a 2.4% year-on-year increase. That's really resilient considering market volatility.
Yes, and they benefited from higher volumes and from being able to place a lot of fuel in the domestic markets, right?
Yeah, and the cost advantage of using ethane cracking versus naphtha is always a factor. Polymer deltas also improved this quarter, and fuel cracks were healthy, and all these factors contributed positively.
And their quarter-on-quarter rebound was also significant at 16%. That is a huge increase.
Yes, and that was driven by a recovery in mid distillates like gas, oil, and ATF, plus improved polypropylene and PVC prices. Their EBITDA margins improved by 160 basis points to 9.6%.
So, all in all, a good story from the OTC segment despite some market headwinds. What about the medium to long term outlook?
Well, their margins have reduced in the last 5 years across refining, polymers, and polyester, but they see their investments in light feed cracking and focus on domestic market will help for growth.
That's good. They're playing a long game, focusing on scale, flexibility, and integration. And their investments in high growth domestic markets should lead to better margins, right?
That's the plan. They're also investing in PVC, they're expanding their ethane pipeline, and they're also investing in polyester capacity. So, growth for the future looks good.
So, overall, a really well rounded performance across all segments. They're expanding and investing strategically for long term growth, it seems.
Exactly. And the consumer businesses are now a major part of their business, and their domestic energy market is seeing strong demand, and Geo's growth continues. So, it's a very positive picture.
All right, that covers the main points from their financial results. But before we end this session, we still have some acquisitions to talk about.
Yes, they've acquired 100% equity stake of Lakadia B Power Transmission Limited. This is a transmission project they won and will enable them to develop transmission infrastructure.
Okay, so this is more of a strategic play, focusing on expanding their capabilities in infrastructure development. And there's another acquisition in the battery business?
Yes, they've also acquired 100% stake of Reliance New Energy Battery Limited. This will enable them to engage in the development of energy storage capabilities.
All right, that aligns with their focus on new energy and clean tech. This is for manufacturing battery cells, packs, and containers?
That's right. So it seems they're working on all aspects of the new energy ecosystem, including both transmission and storage.
Okay, so two acquisitions, both in the areas of power transmission and battery storage. That signals their focus on new energy.
Absolutely. And the acquisitions are also part of their broader strategy for expansion and growth. They also emphasized about how they are always investing in the bottom of the cycle, taking advantage of low project costs.
Yeah, that makes sense. So, a really comprehensive quarter and with strategic moves for the future. That's a lot of ground we've covered today. Any final thoughts?
Well, it definitely highlights how Reliance is continuing to grow and diversify, and they're continuing to take an approach for a longer term growth strategy. They definitely have a clear view of their future business direction, that is for sure.
Yeah, that's a good summary. Definitely a lot of interesting moves and strategies to think about. Well, thanks for the deep dive, and thanks to our listeners for.
Thanks for having me. And yeah, thanks everyone for listening. We'll be back soon with more insights.